when we stumbled upon, everybody stumbled upon Bitcoin, or at least I did. And it was, wow, this is pretty interesting. This could be transformative. And I said, Art, big could this be? Back when it was $250. And he said, well, how big is the US monetary base?
Hey guys, welcome back to Everyday Finance. In this video, Cathie Wood discusses Bitcoin and crypto. Unfortunately, in the investment world, achieving that level of certainty with Bitcoin is simply not feasible. Once again, they pause in surprise, and here we are, exploring the initial decline in the growth rate of gold. As Stan Dreller points out, gold has established itself as a timeless brand over the course of 5,000 years, or so he claims. Bitcoin has established itself as a prominent player over the past decade. It would be wise for Cathie to give it the attention it deserves. The upcoming Halving event is expected to be a significant milestone in the financial markets. Additionally, the approval of spot Bitcoin ETFs has attracted billions of dollars in new investments. And lots of things Cathie Wood discusses, so please watch the video to end and share this video, and subscribe our channel Everyday Finance. Thanks.
Across the world.
This takes us back to our early days with Bitcoin. And in learning about it and writing our first white paper in 2015 in collaboration with Art Laffer, when he read through the white paper, he said, whoa, wait a minute. This is what I have been waiting for since we closed the gold window in 1971. He said, I have been looking for a rules-based monetary system. And he was, fascinated by it, and increasingly so. Rod, you've met him. He's in Tennessee as well, Nashville. And he's so excited about the idea that we could be returning to private money and to get the Fed out of the equation. Now, I can tell you, as an investor in the equity markets, the idea that Fed Chairman Powell can come out and all of the other governors can come out and say boo, and the financial markets freak out. Everybody freaks out because of what they're saying. It's really been quite disruptive, and increasingly so in the last few years. So this idea of, a global, digital, decentralized, private, no government oversight, rules-based monetary system is pretty provocative, profound, having been through many cycles since the late 70s when I was in college, but I entered the financial markets at that time. And, I just saw money unhinged in my early days, and have been a student of, okay, how do we change this? And so when we stumbled upon, everybody stumbled upon Bitcoin, or at least I did. And it was, wow, this is pretty interesting. This could be transformative. And I said, Art, big could this be? Back when it was $250. And he said, well, how big is the US monetary base? So back then it was $4.5 trillion. Today it's $7.5 trillion. That should tell you something. And he said, well, there's your answer. And so we've been running with it ever since. Could it serve the three roles of money? That was our first white paper. And we concluded, yes. Could it, is it ringing the bell for a new asset class? Yes. But in terms of this monetary system idea, the halvings, this one coming down from 1.8 to 0.9, is taking the growth rate of the Bitcoin supply below the long-term average of gold supply growth. And but the difference is, and when I say this to people, it's an aha moment for them. The difference is when the gold price goes crazy to the upside, miners come out and start mining more, and send the supply growth up. And when I tell people, in the investment world, that that's not possible with Bitcoin, it's just not possible. Again, they do a double take. And so here we are for the first time below the growth rate of gold. And as Stan Druckenmiller says, well, gold is a 5,000 year brand. That's what he says, at least how he says it. Bitcoin's a 10-year brand, and I should pay closer attention to it. And I think the halving is another one of those aha moments.
Ethereum co-founder Joseph Lubin believes that the actions of the United States Securities and Exchange Commission are deliberate. Impeding innovation poses a threat to the current financial landscape of the country. During his speech at FT Live's Crypto and Digital Asset Summit in London, Lubin discussed Consensus's choice to take legal action against the SEC. This decision came after receiving a Wells notice from the US securities regulator. It seems that the SEC has reclassified E as a security without informing anyone. Instead of engaging in open discussions and establishing clear rules, they are opting for a strategic series of enforcement actions. The CEO of Consensus, the developer of the MetaMask wallet, expressed concerns about the enforcement actions, suggesting that they aim to instill fear, uncertainty, and doubt within the cryptocurrency industry, potentially leading to the company being forced to move its operations offshore. Lubin stated that the firm's response to the SEC is intended to seek further clarification from US courts. This is because the Commodity Futures Trading Commission had previously categorized other as a commodity. The CEO of Consensus also emphasized the approaching deadline for the SEC to make a decision on the approval of other spot exchange-traded funds, ETFs, which has motivated the regulator's renewed enforcement action against Ethereum. We suspect that there is a lot of activity happening with the intention of providing them with a justification for their actions, in case they deny the other spot ETF. Lubin explained that the SEC had taken notice of the significant influx of capital into the ecosystem after the spot Bitcoin ETF was approved. I believe there is a concern that our ecosystem's significant improvements in scalability and usability may attract a substantial amount of capital attention. According to Lewin, the possibility of customers in the banking industry shifting their assets into digital forms through decentralized finance constructs might cause concern for many banks and financial institutions. The SEC is likely not interested in witnessing a wave of innovation that could truly revolutionize the industry, Lewin stated. Let's get back to Cathie Wood interview.
I think in the and Yassine, you can corroborate this, but in the financial markets, because the spot Bitcoin ETFs have been approved, and there's been, I don't know how much is the net new, Yassine, I don't know, it's billions have come in. And these are people who, many who probably were not in the last halving and or in Bitcoin during the last halving. So it's going to be, and they come in saying, "Oh, with the halving, that means Bitcoin. The Bitcoin price is going up because they saw it in 2017. There was a little bit of a wobble before it happened in 2021."
Putting Bitcoin aside, in June, the cryptocurrency market may reach its local bottom, signaling the beginning of the next phase. According to market analysts who closely study historical chart patterns, it is predicted that altcoins may reach their local price bottom around the beginning of June. This observation has been made by popular crypto analyst W Capital, who noted in a May 8th post that altcoins are currently following the expected trajectory. Altcoins reached their lowest point in early February, experiencing a significant sell-off compared to Bitcoin. The altcoin market faced a tough time during the summer, and in the past month, it took a beating. The market cap of altcoins, excluding the top 10 cryptocurrencies, dropped by over 21% in the previous month, reaching $265 billion. As the M2 money supply estimates all cash and short-term bank deposits across the United States, it reflects the growth of the money supply in the world's largest economy. Supply may potentially flow into altcoins and niche coins, leading to the emergence of the altsun. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance. And we will meet in next video. Thanks.